Hi everyone. In this presentation, I will be going over the contents of a cash flow statement and using NVIDIA's latest year-end reporting. As a side note, NVIDIA has, is, and should continue to outperform the markets. Before we get into the cash flow statement, we need to get the net income from the income statement, as this will be the first line item in the cash flow statement. So as we see here, the net income reported is $29,760,000,000. So that's 29,760 in millions. Here is the cash flow statement for NVIDIA as reported for period ending January 28, 2024. That was just recently announced a few weeks ago by NVIDIA. So the cash flow statement paints a picture as to how a company's operations are running, where its money coming from, and how it's spent. Also known as statement of cash flows, same idea. It helps its creditors determine how much cash is available, referred to as liquidity, for the company to fund its operation expenses and pay down its debts. The cash flow statement is equally important to investors, such as us, because it tells us whether a company is on solid financial ground. As such, they can use the statement to make better, more informed decisions about their investments. How effective the business is in managing its inflow and outflow of cash. So it's like watching how cash leaves the business, its outflows, and how cash enters the business, its inflows. So when we see a positive number on this report, on this statement, it means money came into the business. So almost look at it as like income. While if you see a negative number on this report, it's money that's left the business, so like an expense. Again, the cash flow statement uses the cash method, so it's all about real physical cash exchanged. Not I owe you, you owe me, accounts receivable, accounts payable. It's more real cash being exchanged. So to give you an example, if I have an item I want to sell to someone for $100, they give me $100 of cash, I exchange the goods, that's a cash method. Versus I have something to sell, the buyer says, I'll buy it off you, but I'll pay you tomorrow. There's no real cash being exchanged. So the cash method is when cash is exchanged hands between the buyer and the seller. So let's start with the statement itself. So we start off from the top. We said the net income that came from the income statement of $29,760,000,000. The first section of the report is cash flow from operations. So this is running the business from its product and services, basically cash from its core business. The next section is cash flow from investment activities. So this is buying and selling assets, cash received or spent from investments, cash flow from financing, so debt, equity, dividends, raising, borrowing, and repaying capital. An example, new shares issued or dividends paid out or a bank debt paid out. And finally, the last part is reconciling the cash and cash on hand. So we take the cash from the balance sheet, we take the cash that's been adjusted through this statement, and we come up with the end period of cash and cash equivalents. That number at the bottom, the 7280, is the one that gets transferred to the balance sheet. So this is just a quick overview, and the next few slides will go in a little more depth each section. Now let's look at the top section of the cash flow statement, which is the cash flow from operation activities. So we said we'd get the net income from the income statement. So we start off with that, which is the 29,760. Again, these numbers referred to are in millions. So in this case, it's 29 billion. So when you see the numbers below, just add 6 zeros at the end. So it's in millions. So the net income is $29,760,000,000. Below, we'll try to now do the adjustments. So like we said, because we use the cash method, we're going to adjust the actual cash to see what they have on hand by really taking what we had in the income statement, which uses the accrued method, which factors in accounts payable or accounts receivable. So it factors in money that is owed or owing and uses that method. In here, though, we're going to adjust that. So we're going to say what real cash has been exchanged. So I'm not going to go in detail for each line item. I'm just going to select a few of the items here. The rest follow as similar. So let's take the next line item, the stock-based compensation. It's recorded as an expense in the income statement. So if you were to look at the income statement, you would see that number, stock-based compensation, as the $3,549,000,000. That's an expense. However, real money hasn't really been exchanged. So we haven't really paid this compensation to anyone. Think of it as I owe you sometime in the future. So the cash is still sitting in our bank account, and at some time in the future, we will pay this out. So on the income statement, we'll report it as an expense. Here, though, we want to say that, yeah, it's an expense. However, it's still in our bank account. So for this, we're going to add it to our statement here as cash. So that's the purpose of the cash flow statement. We're really trying to show what cash we really have on hand. So if it was you personally, what you're really trying to tell the banker, the investor, whatever it is, look, this is what I really have in my bank account. However, you need to be aware that some of that money I have to pay in the future. But for this report, we're just trying to show a statement of cash that we have on hand. So in this case, you'll see it reported as a positive. So we're adding it back as a cash statement, a cash item, line item. The next one below is depreciation and amortization. Same idea here. On the income statement, we report it as an expense and we write it off. So 1.5 billion. However, here we're going to say, well, money hasn't really left our bank account, for lack of a better term. So we're going to put that back as cash. So now, so far, we take the 29 billion that we started. We're adding the 3.5 billion. We're adding the 1.5. So our cash is growing here. We're justifying that we have a lot more cash. However, let's go down a few line items. I'm just skipping the other ones. Same idea. So as you look at it as a negative versus a positive, I'm starting now with the next line item as accounts receivable. Again, in the income statement, we will show this as a positive. So on the income statement, we're saying we have $6 billion in receivables. So we show that as cash that we're receiving. However, we haven't really exchanged cash. So these are figures where people owe us. Let's refer to it as if someone owes us $6.17 billion. And the income statement, we took it as income, but we really haven't received that money. So it's not in our bank account. So on the cash flow, we're going to remove it. So we're going to deduct it. We don't have that money yet. That's why the cash flow is important to understand, to give us an idea of what real cash we have in our bank account. Another one is accounts payable, the opposite. So on the income statement, we say we owe 1.5 billion. We haven't paid it yet, but we owe. So that money's still sitting in our bank account. So if I owe money to you, let's say 1.5 billion, it's still sitting in my bank account. I'm going to show that as cash in my bank account. Yes, you need to make note that I owe that money in the future, but sitting in my cash account, I'm going to put that and add it back into the statement to show that I still have that money. So taking each line item and doing the same thing, what you're really doing is you're starting off with the net income of 29.76 billion, and you're going to start adding and subtracting, really kind of doing the reverse of what you did on the income statement to show what your real cash is on hand. So from the top section of the cash flow statement, which is the cash flow from operating activities. So this is the operating activities that we discussed, or I mentioned earlier, from your core business. We show here that once we do all the math, we started off at 29,760 in net income. However, we really have 28.090 net cash from the operation. So that number went down a bit because now we're adjusting those numbers. Now moving on to the next section, cash flow from investing activities. In this section, we'll treat this separately. So we're going to list all the line items related to cash that leaves and enters the company related to investment activities. So in this case here, as we can see, there's proceeds from maturity, marketable securities, sales of marketable securities, etc. So you can see each line item here. And to the right, you'll see the positive and negative values. And like I stated earlier, positive means the cash coming into the company, meaning into your bank account, and cash leaving the company, expenses or your payout that's leaving the cash from your bank account. So, for instance, the first two line items are positive. They're related to proceeds from marketable securities. So this could be, if you want to relate it to yourself, it's more like you sold your NVDA shares and you got cash. So that cash came into your bank account. Same idea here. So NVIDIA sold or received cash for marketable securities that they had purchased in the past. Third line item is purchase of marketable securities. So this is like you buying NVIDIA. So you paid $18 billion worth of shares. In this case, the NVIDIA bought marketable securities. They could have bought stock, who knows what. You could find out what exactly that number is by going to the 10K form and see exactly what they purchased. So that information is available. This is purchase. So this is $18 billion that left the bank account, if you want to call it that. So cash that's gone. Purchase related to property and equipment. This is what also referred to as capital expenditure. So you'll hear the term capex. So this is money that they reinvested back in the company. So that's $1 billion. And the rest, acquisition investments, again, additional expenses or purchases that they've made in cash that left the company. So for a net cash total of $10,566 million. That's how much cash left the corporation. So this is a number you look at and go, ooh, a lot of money, 10 billion. What was spent on it? And as an investor, you try to understand why they spent this money. Where did it go? And you want to make sure that they're making wise decisions. So again, in the 10K form, you could look at all the details of each line item where that money went. Now, the last section of the cash flow is cash flow from financing activities. So again, like the previous section here, section on its own for financing. Again, the different line items are displayed here. I'll just go through some examples. There's actually, in this case, the majority of them are all expenses except for the first line item. So proceeds related to employee stock plans is $403 million. Payments related to repurchasing of common stock. So in this case, the company decided to buy back NVIDIA shares, so that was worth the $9 billion. Got cash that left the bank, the company, dividends, etc. So all these are all expense. Again, the total at the bottom is $13.633 billion. You look at each line item, go to the 10K form, and try to understand where the money is going. So you want to make sure that they're making wise decisions. So you may look at this and say, they're not spending their money wisely. Just like if you're looking at a government and saying, why are they spending all our tax money on foolish things? That's a bad decision. Or, oh, I'm glad they're spending this money and reinvesting back in our economy or whatever that is. So that's the purpose of looking at these line items on the cash flow statement. Now let's take a look at the cash flow statement again as a whole. As you can see here, I've just highlighted each section, the three sections that we just went over. So the operating activities amounted to a net cash, let's call it, we adjusted the cash to 28,090. The investing activities, we have an outflow, meaning money left, a little over 10 billion. Financing activities, over 13 billion. And when we add these numbers, sum it all three together, we say that when we took all these line items and did all the math and figured out what's really inflow, what's outflow. So we looked at our bank account, if we were talking on a personal level, and we looked at all the transactions for that period, what went out, what came in. We said there's a net change, right? There's a change in cash and cash equivalents. That term, cash and cash equivalents, is what's on the balance sheet. This is what we refer to as cash that you have on hand, kind of, right? That could be liquidated immediately. We're adjusting it by $3.891 billion. That's cash that we have. So that's a positive that we need to add into our running total of cash, right? That's the number that we're going to take and adjust to our cash on our balance sheet. we take the cash that we had from the previous period. The previous period we had on hand of $3.389 billion. We take the previous number that we just discussed here, the 3.891, that we adjusted on the cash flow statement, and we add those two numbers because they're both positive, and our cash and cash equivalent at the end of this period is really now $7.28 billion. That number is going to be transferred over to the balance sheet. So now we're saying to the public is I really have now $7.28 billion in my line item on the balance sheet of cash and cash equivalents. And there's the balance sheet. I just took a snippet from it just so you can see. On the far right, you look at the previous period, meaning when they reported last year, they said, hey, look, we have 3.389 cash and cash equivalents. And this period that we just reported, it's now higher. It's at 7.2. How we got to 7.2 is really through the list of items that I showed earlier, the cash flow statement. That's what we're trying to get out of the cash flow statement is, yes, let's look at each line item and see where they're spending and making money, where the money's going and coming, and trying to determine how much cash and cash equivalents adjusted from that to populate into this line item here. So I hope I gave kind of a quick overview of the cash flow statement itself. I'm just going to throw a couple of little more details here. There's lots to come to get out of this, and I would highly recommend you all, Google, YouTube, whatever, to get more details on the cash flow statement to understand better what the purpose of it is. But I hope I gave a quick overview of the cash flow statement, the details that are in each line item that you look at to show the cash going in and out. The free cash flow, you'll hear that term. What people want to know, what's the free cash flow for a company? Really, it's taking the cash from operations. So if you recall the first section of the report of the cash flow statement, we get that number, which is 28 billion and 90. So remember when I showed earlier in the first section, we took the net income, we did some adjustments to come up with, here's the real net cash from operating activities, that 28 billion. And then we look for, in the second section, remember I mentioned the CapEx, the capital expenditures of 1 billion and change. So if we take the cash from the operations and subtract the CapEx, the capital expenditures, we take those numbers, and in this case, you can see that I have it here reported as the number comes out to little over 27 billion. That's NVIDIA's free cash flow. So that's huge. That's cash that they have that they can use to fund more of their operations or whatever they want to do. And I'm just going to show a couple of charts that I've put together that I follow over time. So these are just some of the things that you look at, the cash from operations and the free cash flow. And as you can see here over the past several years, it's kind of been going, steadily up. And then the past year, you can see here how things have just spiked. Meaning all of a sudden now, think of yourself as a little shop at the corner, you're doing well. And all of a sudden you've got this lineup of customers shopping and you've just got a spike of revenue here. And that's why the stock price is trying to run up to the valuation where the investors feel the company should be. So if you looked at the NVIDIA price just less than a year ago, it was just under $200 or so. And now the stock's trading up to close to 1,000. A lot of people are saying it's overvalued. Wow, it's going too high. Well, it's trying to really catch up to its real valuation. That's why the stock is, you can see it keep going up and up and up. So like I've mentioned in my post, my base case, meaning the average case of my price target for the stock should be closer to $1,200 based on its price earnings multiple. However, I could see it go as high as $1,600 within the next 12 months if an assumption is that they are going to continue to grow at this rate for the next 12 months. At some point, though, this growth rate will kind of taper and kind of calm down, and look back, you'll see that the stock ran up to 1,200, 600, whatever it is, And if nothing new product or no new S curve, it'll just kind of sit around that or maybe even drop. For the immediate future, I suspect, and I'm guessing here, that the stock will keep climbing to new highs. I hope this helps a bit. That's it.